All right, good morning, good afternoon, good evening. I'm a couple minutes early. Uh, there's news coming at the top of the hour. There's a speech from an ECB member, and so I just want to, this guy here, Schnabel, I just want to listen to what he has to say and then watch the market react, and then we'll be able to get started. Thereafter, there's really nothing for us to be concerned with until we get 5-year notes, 11 o'clock. So we have a clear runway once this speech has taken place, and that's in about 3 minutes or so. Just to review what we did yesterday in the meantime, our trades from yesterday as a group closed successfully as the European session opened, and the most drawdown we saw was 24 pips. And so everything we did yesterday was successful. This morning, I took a couple of shorts, or a couple of longs after the news came out. And here I am. I bought 4 trades in the third box right there. Then when we retraced about 10 minutes ago, I bought 4 more right here. And now I have this equal position built between the 2 boxes. I'm just looking for a higher high, right? So at the top of the hour, we'll get this ECB member speaking, and we'll be able to react thereafter. Right, so if we look at the daily chart while we're waiting, we have higher highs, we have higher low, ever so slightly. It's not that much, but it's enough to call it. Right, we are red, so we are in the midst of a pullback. Let's go and check that out on an hourly scale. All right, so on an hourly scale, we can see how we pushed off of the low and we've pulled back from this recent high. Right, so this is where we are playing right now. Let's go take a look at that on the 5-minute scale. Right, so on the 5-minute scale, we can see how we rallied up, pulled back to support, and now we're testing resistance. And if we break that resistance, we have the next level slightly higher. And so this becomes the ladder that we work with. So let's just see what that fella has to say at the top of the hour, and then we'll be able to trade appropriately from there. Right, I'm looking at 725, which is this zone up here, right here. That's from the 2nd of April. All right, so I'm looking to go back and retest resistance from the 2nd of April. All right, so a few more people have come into the room. Just to review what I've been saying, I'm waiting for this guy here to do his bit, and then we'll be able to start trading. And so as we're waiting for this speech, I did have a couple of opportunities presented to me. So I bought in this box, I bought again down here. I built a layer or 2 layers. The average is in between, and now I'm just waiting to see if I'll be testing 725, which is right there. It's about 3 boxes away from where we are right now. 2 boxes, oh sorry, 3 boxes. So I'm looking for a 3-box move above and beyond what we have here already. Right. Anything is possible. We could also just fail to go higher and start to make lower lows. Right. That's an eventual outcome. That's what I'm kind of hoping to deal with at some point, but not right away. All right, let's see what that speech has in store for us. if anything. Right. If we go and take a look at the dollar index very quickly, like we do every day, the dollar index on the 4-hour scale is back to resistance. Right, so we have to go through this resistance to see more bullishness and therefore a bearish euro. Right, so as long as this is held up, the euro is likely going to be benefiting from this. And that's what we have our positions for. Right, so on a 5-minute chart, we have the ladder. We ultimately have a ceiling, we have a floor, we have these levels of intent where we think we have a job to do. Right, so we just have to see if we are presented with that task. And now if we go from the top, like we do every day, just to touch on things. Right, we have a higher high, we have a higher low. We are in the midst of a pullback, and we can see that clearly on an hourly scale, right? The low is here, the recent high is there, and we've pulled away from the recent high. We're now retracing it. Right? So the intent is to see if we can get up here, and if we do break this, ultimately we want to be selling at the red line. Right, so that's about 3 to 4 boxes away. Right, so we know the plan is to sell when things are expensive. Right, we don't want to be chasing it down. Okay, so on a 5-minute scale, those decision points, they get tested throughout the day. Right, and then if you can actually start subdividing these things, and at some point you'll realize it's either 3 pips, 3 pips, 3 pips, or the average will be 9 pips, 9 pips, 9 pips. Five, 7, right? So every couple of lines you get an average. And so this is it, right? We have this static way of looking at the market where the price has to come to and from the lines, or on the left side we have a dynamic approach where we can actually use the same average and use it like a measuring device to measure real life, right? We're measuring the real market as it's evolving, right? If we suspect this is a high there, we pin the box on that high, and sure enough, the market gave us 1 standard deviation. And now our way of thinking is to ask, is this going to break the low, or is it going to bounce off of the low? And the probabilities tell us it's likely going to bounce. And we can see that here. Right? The break is a lower probability. Right? This morning's news was not so hot for the US. Right? The news that came out this morning was not so hot for the US, and so it's helping the euro. And that's the idea, right? We're not looking to go to the moon with this. We know where to become sellers in the general ballpark, and that's all we're expected to do, right? Just become sellers in this general area up there. All right, so if we make a higher high, I want to start selling that. right? Ultimately, 725 is resistance from the 2nd of April. Right? And for those that are trading different pairs, one that's one, oh shit, I just closed it. One pair that's worth looking at is the yen right now, because it's reached levels that we've been looking for years. In some cases, depending on what you trade, you may have been looking at this yen, particular yen level for a long time. Let's zoom into this. Let's remove the Ichimoku and go check 30 years. Oops, wrong one. Which one am I in? Oh yeah, this is the wrong one. I want to go Asia Major, US dollar yen. Is this the one that I was looking at this morning? No, that's not the one. There's one particular yen pair that we want to look at. Euro yen. All data. This is the one. Right, so we've been at this level. We have not been at this level in about 25 years. It's a generational trade setting up, right? So looking at this on the weekly scale, you can anticipate the next move, right? We already know probabilities tell us bounces are more likely. And so you want to start building a short in here, right? And that's just something to think about, it's not a trade that you want to be scalping your way through. It's a position type trade, and it's a position that may last all year, right? So for those of us that are very, very short-term traders, it's a challenge. And this is why I bring it up, because, we need to be challenged, right? This 3 pips, 3 pips, 3 pips is our groove. We need to be thinking outside of that box, right? We need to be getting better. Our skills have to be looking forward all the time, right? I want to be progressing. I don't want to find complacency, right? I don't want to be content. Complacency breeds content. I don't want to be complacent. And so I'm always looking for things. I'm always looking for, big trades, swing trades, position trades, things that test my resolve, right? Because this is what I figured out works for me. I still have to think outside the box. I still have to push the limits, right? Right here, I want to take a buy, right? And I'm buying at support, right? If I, earlier this morning, before all of this Euro stuff, I was trading NQ. I was trading the NASDAQ. I did so before the open. And then with the market open, I switched over to trading euros, right? That I give myself that 30 minutes after the market opened. And then I started trading euros, right? So this is what we're going to be doing in the evening. This evening, tonight at 9:30 Eastern, we're going to be looking at trading futures. Okay, so pick your poison. You can trade euros in the morning in a Forex/CFD environment, or if you want to, we can trade futures together in the evenings in North America.
Germany's 10-year bond yield rises to the highest level since November 27th, last up 7.9 basis points.
I just put the 4 trades back on, and the same ones that closed earlier, I just put them back. I'm back to support here. Right, and if we go a little bit deeper, right, so if this is a break or a retrace, if we're coming back in the box, so to speak, I'm gonna layer in a fifth right there. Yeah, so the yen pair is all of the yen pairs are stressing these levels right now. The yen has been weakening and weakening and weakening for a decade, if not more. And it's situational now. At this point, you can start thinking about building a position. Right? Start selling the euro yen for 6 months. Think in terms like that, the big picture. All right, if I get back to here, so we've been trading for about, 10 minutes, 13 minutes. We've got some winners and then position built for more, right? Ultimately, if you guys get disconnected before the end of this trading session, this is what we're looking for, right? I want to be a seller up here. And so I'm basically buying my way up there. I have to upload about 3 days worth of videos also. There's some catching up to do on YouTube and a few other aspects of my daily life. All right, let's see if we can close these trades in profit here and then give us the opportunity to recycle. Depending on which feed you look at the yen, also, you may not get all of that history. Looking left. Right. I just want to be able to buy a fifth, maybe a sixth down here. There it is. There it comes. One more push. Right there. 5 and 6. So now I should have 6. Oops. Yep. All right, so buying when things are falling is a little bit scary. It's hard to survive this if we're wrong. Our brain will go, oh my God, what did we just do? But by the same token, if we're right, if we are in the right area, if we're in the right zone, this helps to make your money back faster, right? You get more money out of the deal. Instead of buying the confirmation, which is after the trade, we're preemptively taking the trade, right? And so it's almost like we anticipate the bounce and we're willing to be a little bit early. This bounce right here, right? And we were a little bit early on the bounce. We were about...
Gilt's dropping here. UK 10-year yield up 10 basis points. That's the highest since November.
We dropped past our entry at 1 pip, 1.5 pip. right? So we were early at the trade instead of being late at the trade. All right, if you're trading gold at this particular level right here, being long looks nice. And not to go to the moon, but just to get back to maybe 2350 or so. Right, we're just looking to bounce off of this, recycle our trades, ultimately find our way up to here. I'll change this to yellow. And then once I get to that yellow line, I want to start selling, right? So here I'll be selling 2 boxes worth, maybe 3 boxes worth, who knows? If we adjust the boxes, if we assume this was a high, the box is giving us 1 standard move, and now we suspect it will stay in this box unless the probabilities drive it out, right? Unless something happens to drive it out of
So,
here.
looking into flow here as demand continues for SOFR options, hedging a Fed rate cut next week. So early flows in the SOFR options market include cheap dovish hedges targeting aggressive Fed cuts at next week's policy meeting. The flows appear consistent with the hedging VAR shock risk, given deep out the money strikes. Similar flows were also seen on Monday as well.
Yeah, so the boys are positioning themselves for next
So looking
week.
now to the fear and greed index, 43 out of 100, which indicates fear, while the crypto fear and greed index is at 72 out of 100, indicating greed. We keep an eye on the VIX as well. It's currently down 3.1% at 15.8.
So things are slowly rotating. Here we are, we're making money. We were early at the entry, and we're making money before the guy that waited for confirmation. All right, so a red candle back to previous support / resistance. This area here, this little zone right there. If we revisit this, we want to buy that and do it with the 2 clicks that you just closed. We want to keep
In 10 minutes time at 10:30 a.m. we get the weekly EIA inventories. EIA crude oil inventories forecast build of 2 million on the prior a build of 2.735 million with an expected range of a build of 2.254 million to a draw of 1 million. EIA gasoline inventories forecast draw of 1.437 million on the prior draw of 1.154 million. EIA distillate inventories forecast draw of 1.75 million on the prior draw of 2.76 million. EIA crude Cushing inventories prior build of 0.033 million.
All right, and that should have very little impact on what we're doing. Remember to buy on red candles, preferably near support, something like this right here, right, slash resistance. So a move back to this level would be beautiful. A little bit deeper, I would not disagree with either. Right. If you can get your 15-20 pips or 15-20 trades in, consider walking away. Sooner the better. Right, we still have our long tail stop, and we have the opportunity to build a position if we're presented with a pullback. Right, on a 5-minute chart, we are going up the ladder. And so let's look to our left and see where the next couple of rungs might be. And this behavior, you can do this on any time frame, right? I'm doing it on the 5-minute chart because I intend to trade on the 1 minute, right? But if you have more money in the account and you are trading bigger time frames, that relationship, static on one side, dynamic on the other, is applicable to any instrument out there. Just pick 2 time frames that you can relate with and trade appropriately. On one side, you're letting the price tell you what it's trying to do, and on the other side, you're basically extracting from the market what it's capable of doing on its own. Right? So on one side, it's telling you the next move, and on this side, you're exploiting the current move. I've used the analogy before of a rally car. Your 5-minute chart is the rally car navigator with the map telling you what your next turn in the road will be. And on the left side is the driver of the rally car, and he's only driving what he sees in this windscreen, right? You only see what you see in your windshield. And so you trade what you see fit. And if you break the perimeter, it adjusts your behavior accordingly. Right? We're not making things up. We're just allowing the market to tell us what our next move should be. All right, so here we are, closing trades again. It's a nice problem to have. I need a pullback to get back in again, and then wait for the next box. Right, we need a red candle to get in. There we go.
In 5 minutes time at 10:30 a.m. Eastern, we get the weekly EIA inventories. EIA crude oil inventories forecast build of 2 million on the prior build of 2.735 million, with an expected range of a build 2.254 million to a draw of 1 million. Gasoline inventories forecast draw of 1.437 million on the prior a draw of 1.154 million. Distillate forecast draw of 1.75 million on the prior draw of 2.76 million. Crude Cushing inventories prior build of the 0.033 million.
I want to see a red candle to buy cheap. I don't want to buy expensive. So there's one. All right, so I bought the cheap red wick that was there a second ago. If it pulls lower, I can buy more. I have 3 or 4 more clicks to spend in this box. if we break up into the upper box, I don't want to buy the actual break, but maybe a retest of the break would be bought. Right. We know what the plan is. We just have to see it come to fruition. Baby steps. Baby steps. Come on. Red candle. There's a second. If we go deeper, I'll spend more. There we go. Number 3. Number 4. I want to see it a little deeper or move back into the new box 1.
One minute remaining. I'll lead with crude oil inventories.
I want to see it get closer to this. There we go. That's it. I think I have all 6 now. Yep. Instead of
10 seconds.
putting 6 clicks in, I could increase the size and go back to 4 clicks. I just like this size for simplicity. Makes math easy.
Still waiting.
Come on. I just want a little bounce.
We are still waiting.
it comes. I
Crude, a draw of 6.368 million, draw 6.368 million. That's lower than the forecast build of 2 million. Cushing, a draw of 0.659 million, a draw of 0.659 million. Gasoline, a draw of 0.634 million, a draw of 0.634 million. That's higher than the forecast draw of 1.437 million. Distillate, a build of 1.614 million, a build of 1.614 million. That's higher than the forecast draw of 1.75 million.
That's it for oil. We are butting into all of this stuff here. So we have to go through resistance in order to kind of become sellers higher high or of a higher high. Right? So we want to get up there. If you can take a
We
trade.
have posted the weekly EIA inventories report on the feed for all those interested.
If you can afford to take a trade, this is the last entry for this box. And gold is on its way up. Run for the mill. If we get painted into a corner, it's not the end of the world. No, we can start booking losses. Always start with your most expensive, right? Because it's only going to get worse. And then as you remove the loss, as you close the loss, you book it, you are freeing up margin that can be recycled. Right? And so you organize the next move always, right? Regardless of what just happened to you, 5 trades ago. You don't cry over spilt milk, so to speak. Our goal is to, survive the unknown. We do it because we have backup for the backup, right? We have a plan B, we have a plan C, we have alternatives. My plan B is this box, right? If I get pushed into this box, I get the opportunity to spend the same amount of money I did up top, and I move that white line somewhere where I can actually reach it with a standard move, right? So a standard move is pretty much 9 pips, whether it's on the way up or on the way down. Right? So if I can engineer that break even to be 9 pips from the current price, I'm likely going to trip over that white line with the price. Right? So if I can engineer this, if I can move that line, I can by spending money, right? 1, 2, right? So I just brought the line closer to the current price, and now it's only 5 pips away, and the market only needs to move 5 pips in my favor, and my drawdown is 0. Anything above that white line makes me money, right? So by spending money, I engineer my exit. I engineer my next move. And so this one here, or 2 that I took down here, brought the line closer to me. And now the next couple of candles, I'm hoping, will allow the exit that I'm looking for. right? So it's a probability based off of a bounce. And I'm willing to spend money to find that bounce. And I don't have unlimited money. I can't spend until I'm broke. And so I have a number of boxes, a number of trades per box. And then there's a limit to all this madness if we get to here, right? And so I have room to engineer the exit that I'm looking for. Right? I just can't be clicking at willy-nilly. I have to see the proof. I have to see support. I have to see resistance in order to take a trade with a probable outcome. Right? So if I readjust the box onto that most recent high, the market has moved one box exactly plus a little bit. Oh, there it is. Right, so this is now officially box number 2 for me. And I'm taking a couple of trades there. Right, if I put it back up top, I've been in box number 2 for 2 minutes. Right, and so as I took a couple more trades in this area here, that white line came down a little bit further. It's still 6 pips away. Right? It's manageable. This is something I can live with. You know, if I close all right now, I'm closing an average of
Brent crude futures
6
edge
pips.
higher, up 27 cents after the EIA data shows surprise draw in US crude stocks.
Fun, wow. I'm gonna put one more right there on that red candle at support, the zone that that's staring at me right here. And so let's see if I can get paid on this, right? We've postponed gratification. We're not looking for a big, like a huge swing. We're just looking for a directional move over time. And we have a couple hours. Right? Typically, you engineer this to be in and out within that couple hours, right? So the next move pays you out and you're done. If you find yourself, building a position that looks like it may, go into tomorrow, stuff like that, when it's just not working out, go slowly. There, in our brain, it's always like a catch up. It's always like I have so much to recuperate, where in reality, nothing is further from the truth. I just want to focus on taking trades that are based on the strategy, based on the rules, based on what I see, the facts, not some delusion, right? Like a risk to reward ratio. Right? It's easier to trade the facts, and then the facts tell you when things are not working out. Right? So that white line is 6 pips away. That's less than one box, right? A standard move. And so if I am at support, a standard move would yield a bounce of 9 pips or so. That would be more than enough, right? It's all based on a standard move. If this is not support, maybe the standard move will start somewhere else. That's the issue we have, right? We have to know what the standard is and then react to less or more. Right? Going back to that ladder that we drew earlier, we're testing support. Okay, is support going to hold? Right, a little while ago we were up here. Now we've come down 3 or 4 rungs on our ladder. Let's see what comes of this next. To me, this looks like another one of those famous outside ranges. Right, our famous worst enemy. It'd be even more damaging if it did something like this. Right, for the sake of curiosity, let's measure that. Oh, lo and behold, we are at 50/61%. Right, we're right in that area to see the move back up. All right, let's just get paid, go to the beach. The reason why I'm targeting 725, if we go to a higher time frame and sneak a peek at this right here, this zone up there would be really interesting to revisit in time for the US news we have down the path. I think it's tomorrow or Friday. Right, so a push higher is basically in the cards. It's just a matter of time. And that's what I'm building into. All right, so now we're probably approaching 61%. Yeah, we're dead on 61. We're dead on 61. We're breaking through. I'll buy here. 1 and 2. And so my break even is now 8 pips away. Oh, let's remeasure this. 8.4 pips away. How many trades do I have open now? 13. One too many. I have to wait. All right, the last thing we want to do is fall for the trap. Red, 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 red. Your brain has you thinking sell, 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 sell. In reality, it's only red into support, and the probability tells you the bounce is more likely, right? So you could be making money with the trend, you know, red, 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 but you could also be making money with the bounces if you're a little bit patient and disciplined. And the bounces have a higher probability, right? So it's this probability that we aim to capture. If you do this at the right time of day, you know, under the right macro environment, the average bar is about 3 pips. And so like this here, you can make money rather quickly, right? It doesn't have to be tedious. It doesn't have to be on the edge of your chair, nail biting. Just like this, we want to recycle the trades. Right? If it comes back down a little, I want to buy more. Right? If I get to revisit that same zone again, I want to recycle that same trade again. Right? The aim is to keep that white line within reach. And so we're looking at this white line to be within 9 pips or so. You know, within 2 boxes would be typical. 9 pips would be best. All right, so here's a red candle, back to support. I'm recycling that trade. All right, we're just recycling. I'll remove the fib because we know we bounced off the 61.
Total US petroleum exports hit record 12.21 million barrels a day, according to EIA.
And I'll move this over here, like so. Outside range, our famous enemy. What do I have? 12. I can't take any more. I have to close some before I reopen them. Gold is still pushing higher. Euro is testing support. If we go to these higher time frames that we started with, we still have a higher high, we still have a higher low, we still have a red candle, and it is less than average, right? We're at 36 pips overall in the last 19 hours. 19 hours of a new day is only 36 pips. And here we are trying to figure out how we're going to add the balance. Are we going to make it to the bottom? Are we going to add it to the bottom? Or are we going to add it to the top? Right. On an hourly scale, we came off the low, we put in the high, we put in a higher low, we put in a higher high, and there's another higher low. What should come next? Right, if this is a higher low, we should get a higher high next. Right, so are we going back up the ladder? Gold is still pushing higher. Let's take a peek at NASDAQ real quick. Ooh, I got out just in time. Beauty, beauty. All right. Come on. Top of the hour, I'm looking at the London fix coming up, right, in about 10 minutes, 8 minutes. This is the last week of the month. And so with that, we tend to see an increase in volatility, right? Actually, we have the 29th and the 30th. So that is Monday, Tuesday of next week. So the 29th might be a killer day for us. Let's keep that in mind. When we start next week, we're starting the last 2 days of April. Sorry, I have hiccups. The last 2 days of April, the 29th will be useful for us. It's a Monday. Okay, cool. I'm just thinking ahead. Volatility tends to increase at month end, and likewise with week end, right? So tomorrow is Thursday, Friday. An increase in volatility is almost expected. All right. I think I'm at 12, 13 trades. I'm at 12, so I cannot take any more. However, if you can, here's a good place for it. There we are. Trying to not click the mouse, trying to, refrain from over trading, overspending. That's been my nemesis. I see opportunities everywhere, so much so that I run out of money. And half of them are bad, half of them are wrong. They're just, they're wannabes. They're not good enough to be good trades. And so what I've come to realize is limiting myself to 4 or 5, maybe 6, depending on the money that I'm working with. But to have an actual limit and sticking to it is beneficial in the end, right? It limits the over trading in the moment, because in the moment, it doesn't feel like over trading, right? I still have an hour in front of me, but I don't have the money to survive a whole hour if I'm wrong right here, right now. And so it's planning ahead, right? I planned ahead to spend money in this box and in this box before ultimately calling it quits. I just cannot borrow from Peter to pay Paul, right? That's the problem I used to run into. I would put it all in box one because it looked so good. And then I had nothing left for boxes 2, 3, and 4. And so now by spreading it out and only based on the proof that's there on the left, sometimes it's 2, sometimes it's 4, sometimes it's 6, right? It's not all the boxes have the same content. However, they're all the same size, right? So the average is about 3 to 4 pips apart within the box. And it's usually based on what we see on the left. And there's times when there's nothing on the left. Like we flew through the box, right? And so if there's no clues, right? So I'm assuming this is a bottom. I'm assuming I'm at support. And I'm just resetting the box, right? Top of the hour, I'm resetting the box on that swing. And I'm thinking, oh, maybe the next hour will be a move back up, right? This is to catch if I'm wrong. Box number 3, box number 4. Right? It's the box is to allow me to see what the market is capable of. It's not a for sure. Right? It's just telling me the market has the ability to do this right here. And it has the ability to do this in 60 bars without a catalyst. Right? So it has the whole hour to waffle about and, go up and down 9 pips. It may go and break that bottom here and go down 9 pips. Much like it can bounce off this support area and go up 9 pips. Right, so yeah, the trades inside the box off of the edges are because of what we see on the left, right? Otherwise, it's off the edge of the box, something like what we have here. The edge is really near. It's almost 1 pip away. This is a probability of the bounce is extremely high here. You just have to start measuring from a swing, right? So if this is a swing high and we are 1.5 boxes, the market has the ability to come all the way here. If it's holding this and goes back up, I'll put my box on here and reset for an up leg. Right? It's our forecasting ability is one average move into the future, right? One average move. And so that literally could be straight up. Right? It doesn't have to have a bias. It doesn't have to be bullish or bearish. It's just one average move. And that average happens to be repeated over and over and over and over. It's literally everywhere on this chart. Right? So once we figure out what the average is, and then you anticipate where it starts from, you have a pretty good idea of where it's heading. Right? The start and stop, i.e. the tops and the bottoms, is where we find ourselves. Not on purpose, it just happenstance. I don't aim to pick up the top or pick off the bottom. I just happen to be there. There we go. Nice little bounce. All right. let's close up some trades here. We've postponed enough of this gratification. London fix is coming in right on schedule. It'd be nice to see it break resistance and then start making higher highs. We have a higher low. We have a higher high. The next should be another higher high. All right. Whoop, whoop. When a plan comes together. A bit of a pullback. I'll buy more. So this evening, 9:30 Eastern time, so 9:30 New York, with the same link you're currently using. If you want to come back at 9:30 New York time, I'll be trading my Ninja Trader platform. And we can look at trading NASDAQ in the North American evening, therefore avoiding US related news. You know, we get to trade with less risk. It's easier for me to teach in this environment, right? So this right there, we can do something like that in the evening. Actually, if you need a futures demo account, you can pick one up. You can get a 14-day trial from the links in the video description. There we go. I want to buy this right there. I'm just recycling the trade that closed a minute ago. I should be at 12 or 13. I'm at 12. Perfect. All right, so we've made a dozen trades or so, profitable. Or I have, because I started a few minutes before the live session, but as a group, we've gotten maybe 10 or so trades, and there's more coming. All right, the plan remains the same. We want to become sellers when it's a higher high. All right, so if we break this right there, we want to become sellers up here. Hey, it looks as though they give us one of these outside ranges every week. That's what it feels like. You know, it's our nemesis for a reason. If you're a short-term trader, your intraday stops are usually within these outside ranges. And so by definition, this is structured to take you out. And we use a long tail stop, which kind of allows us to survive this, provided it's within a normal environment, you know, a normal day. No, it's not an FOMC. It's not, you know, it's not a catalyst that's driving this. Right, so we know what to do We just have to be presented with the opportunities to do it. All right. I'm hoping to upload 3 to 4 days of video sooner than later. Basically, this whole week has to be uploaded still. All right, so this is kind of what we're looking for. It could line up a little bit differently, right? But selling up there will be the objective. Beautiful. Holding steady, steady as she goes. Right, so that's 61% his holding right here. If we end up making lower lows, some of us will have to book losses. That's okay. And if you have the skills, maybe you can hedge your way out. You can always try and seek an average out. You know, it doesn't have to be a nightmare situation, right? Create a plan of action before you're forced to execute. I'll remove this line because it's delusional. Right, so testing 61% of that swing right here. Another 20 minutes and I'll have to let you guys go. Gold is moving on up. We made it to 22.30, oh, 23.35, 23.37, and climbing. All right. A little more, a little more. I'm gonna change this to yellow. Oops. And change this one to red so I know. point. Lots of opportunities, endless river of opportunities. So we have to somehow filter out the good ones from the not so good ones, and then you have to become, picky. Focus on excellence. That's kind of what we're hoping to create for ourselves. That track record. It's by testing judgment, and poor judgment is what allows you to learn to learn what not to do the next time. So don't be afraid to exercise poor judgment. In a demo account, it doesn't hurt, right? And it teaches. That's the whole point. I'll take another trade right there because I'm at support right here. If we sneak a peek at the dollar index just to see what's happening there. Where did it go? Oh, right here. Time frame 4 hours. Right, we are still at resistance. Yields are at resistance. Don't let your mind get the best of you. And stick to your plan. Let the proof tell you when you're wrong. Right? And book losses. There's nothing wrong with booking a loss. Removing risk from the equation. All right, buy. Okay, so now my break even is 9 pips away, 1 box away. Remember our outside range. Outside range, we're there now. Let's put this on the top. Let's put this right there. It is still 18 pips from the top, 2 boxes. All right, the market has the ability to bounce from here, no questions asked. Just like it has the ability to break on through and keep on going. Right? That's the part that we have an issue with, right? When we see the ADR is missing 20 pips or so, and we're trying to figure out, are we going to add to the top or add to the bottom? Anything can happen, right? So this is it. Right? All we do is test an assumption. Right? This is the assumption, right? Mathematical from the top, 18 pips down. Sure enough, we find support right here. Right? It's not magic. It's just stacking Lego bricks. The bricks themselves never change. And all we do is test an assumption. Maybe it's not support. Maybe it's nothing. And if that's the case, I'm in drawdown. Outside range did the deed. 2, 3, 4. There we go. There we go. Let's see what comes of this next. And I want to recycle that trade if I can. Pull back. Come on, red candle. Pull back, something to get in. I want to see red. There it is. All right. Let's see where the breakout will be. Come on, come on, come on, come on. I've already clicked on that red candle. Yeah, I got one too many. I have to slow down. There we go. Let's see it bounce, baby. Come on, come on, come on, come on. We're not supposed to cheer for our horse, right? We have to be mild-mannered monks. We don't care for the wins. We care even less for the losses. Right? They don't affect us. And we're just really good at executing our process, regardless of the last outcome. Right? So whether the last trade was a win or a loss doesn't matter. Our focus is on executing the best next trade. Right, so yeah, it takes time to find that groove, settle into the groove, and then test the edges, test the outer limits of what you're capable of within the groove. And then at some point, you're going to be thinking outside the box. Right? You're going to be proficient with your groove, and you're going to be looking at, swing trading, position trading, and, maybe a little bit of metal and a little bit of futures. And it's evolution. That's what we do as traders. Part of this trader evolution is to send the elevator back down, like what I'm doing here. Help someone else figure this out. It makes you a better trader too. It makes me a better trader by teaching you guys how this stuff works for me. I'm just some dude on the internet, right? This is not financial advice. This is just how I see things and how I make it work for me. Eight more minutes, I'll have to let you go. I have a regimen to follow. Other than that, you have your plan, you have your marching orders, you know what to do, you know where to do it, and you know how much to do it with. Let's just see if it plays in our favor. I'm curious to see this next box, you know, if we break down or if we break up. It's getting harder and harder and harder to, you know, trust in our bias, right? The longer we spend upside down, the longer we spend in the wrong direction, away from where we want to be, you know, the more our brain starts to think we are so far off the mark. You know, we should clean up this mess. We got to get out of here. Something's wrong. If that's the case, it doesn't have to be a it doesn't have to be the end of the trading account. You know, you can peel off trades, you can fix problems one at a time. It doesn't have to be all or nothing. Our brain takes it to that extreme, right? Our brain sees red and automatically assumes the bank is coming to repossess the house, right? If you see green, you're already buying a Ferrari. You're already spending the chickens before they're hatched. That's just the way the brain works. And here, it allows us to slow down. It allows us to see what is actually happening. No, it allows you to see the trees from the forest. All right, so let's just see what happens. If we do go lower, we start booking losses. You know, I don't want to be participating in box 3, in box 4, right? I would rather lose box 1. Where will this go? And there's our famous outside range. Where's that Fibonacci now? 76%, right? That's our basically the last chance we have right here.
European Commission expected to propose direct sanctions on tankers, flouting G7 price cap on Russian oil, according to sources.
Looking left, we're at support, all that good stuff, right? Support. Box number 3. If you're so inclined, you
So
can.
the S&P 500 down 0.2%, the Nasdaq up 0.1%, and the Dow down 0.4%.
I was going to say, if you're so inclined, move your average by spending money in box number 3, right? And you can also move the average by spending money at the same time, removing 1 or 2 losses from box number 1, right? So that will speed up the process. All right, I have to let you go. but we have our calling card, we have our, our plan of action, we know what to do, we know where to do it from. If you get pushed into a corner, start targeting break even. And if you get granted break even, take it. Don't ask for, 3 more pips, right? Just take break even. We don't want to argue with Mr. Market, especially considering breaking even was not the original intent, right? You got pushed into targeting break even. You must accept it for what it is and accept it, take it. Okay, so I'm gonna let you guys go. I see you this evening if you're so inclined to trade futures, 9:30 Eastern time. All right, use the same link you're using right now. And I'll see you guys later. Trade safe, everybody. Okay, bye-bye.